Well, we didn't hesitate at the open and bagged 35 combined points on that one. That's the best trade we've ever had. That's a nice way to open the morning. We got out of the trade because we recognized some consolidation occurring quickly, and boy, that was a good one. Little volatile in that, little volatile in the beginning there in the A period. Now, what does the day hold? Man, oh man. I mean, it went from 24, 25, whatever it was, to it was actually higher than that, 27, whatever it was, down to 16, back up to 24, 25, back down. Lost my mouse here. Pretty wild. We wanted to get back in. $374,000 contracts traded with a negative delta of 13,000 in the first 50 minutes. This looks like initiative selling for sure. They banged the market hard. We didn't have only but just a little bounce toward the mean to get back in. They're going to take out yesterday's range. Look at this. 1304. Very interesting. We'll pause the video since we didn't have an opportunity to get back in, and we don't want to make any hasty decisions. We'll wait for a retracement. A lot of volume though. It's nice to get back some of our loss. Our combined loss over the last couple of days was over 50 points, so we got the majority of it back, you might say. I wasn't even going to trade today, actually, but I got up in time and saw the report and did it. Look at this market, 1298. This is the area of support yesterday, and we didn't have an opportunity to even get back in. This market's just collapsing here. Holy moly. I'm not going to complain about getting out at 1307, but this is the first time I've ever seen the market collapse to this degree. Didn't pause at support, went right through that. So now the destination trade, I would say, is what we looked at yesterday. Not only the low of the C period at 1284, but maybe 1275, the gap. Close the gap today. I mean, how do we get back in here? That's the thing. It's already moved almost 30 points with no retracement. Well, we'll pause the video and wait. The news just came out. Bear Stearns. Yeah, no wonder I can't get back in. Now I feel bad about not keeping the trade because I don't usually watch the NBC.
I'm already worried about the dominoes. Again, it seems to me that the good news is someone's ridden to the rescue. The bad news is someone had to ride to the rescue. And how vulnerable is anyone else? Because when you're talking about confidence, crisis in confidence, the reality of your liquidity doesn't really matter. It's only perception that matters, and that scares the you know what out of me. Well, who we got? Rick Santelli? Rickster, come on in.
Well, University of Michigan is 70.5, but boy, does that get lost in the shuffle. I'll tell you what, Mark, here's the interesting things that we see in the real world based on Bear Stearns. A huge delayed reaction in any movement on interest rates. Now, that story basically broke just before the bottom of the hour, so let's say 35 minutes ago. Interest rates didn't move for about 10, 15 minutes, and all of a sudden, a 2-year note went from 157 down to 139, a 10-year note went from 353 to 337, and we see that, but now we're seeing Fed Fund futures just off the charts in terms of they're pricing in at the share, a fourfold rally.
10-year lows on Bear Stearns today. Look at this market, 1283. Holy moly.
As I said, less than $30 a share. And it is not just Bear Stearns' problem. I'm also noticing now that Lehman Brothers is down about 15% in the broker-dealer index. If you look at some of the other big names in there, Morgan Stanley's off 6.
Moved almost 50 points from the high today at the open.
This week as well here today.
Yeah. Matt, you know, it's
Amazing.
David. I mean, listen, what's happened?
Well, we just bounced from 80 to 92, so we almost filled the gap there.
Although we still have 20 times down volume over up volume.
20 times down volume over up volume.
And $26 right here. We're talking about 40 million shares at this point. 40 million shares changing hands here. That's the important thing. And right now, of course, we've got a fairly large crowd here. That's the important thing. So here's what the talk is down here. The talk is, well, there's concerns that there's rumors that they might not have a liquidity to Fed. And
Well, the market's quite volatile today. I missed an area at 1307 at the B period high was an area in the A period that block of initiative selling came in, and sure enough couldn't get past that. But in this 79 to 1302 area, I'm a little bit hesitant. The market's bouncing up and down quick. It's easy to lose a lot of money on the wrong side of the trade. I'm just going to sort of stand by and listen to the financial stories that are circulating around the globe. We're going to take the 98.25 short. Would have liked to got the 1301s, but 98. We're only going to risk a couple points on this 98. We're going to risk the 1301, and that's a hard stop, 1301. This trade is not working out. We're going to take the 97.50s out.
And there you go, off 32 points, almost 1.5%. Dylan, pretty stunning development.
We didn't get a break. Why risk it up to our stop? The reason we got in was we anticipated a break, and when that break didn't occur, it's just the volume's erratic. So I'm just gonna hold on, and the next big selling area I think is 1307. That's where the B period really started selling off. So that's what we'll wait for. What we'll wait for. We're gonna take the 88 short. Wanted to get the 90s. We're trying to be patient and wait for balance, but I obviously ran out of patience.
On CNBC and said all these things. Sue and you and I didn't want to fan the flame.
Well, we were underwater with that trade. We almost got stopped out. We had a 10-point stop at the 98 area, never ticked to 98, ticked to 97.75. That's the hazards of trying to trade this volatile market. I made a mistake, though, trying to chase the market. That's no good. I'm not even fully confident in this trade at this point. But we're going to stick with the trade, with our stop, and see where we go. It would have been, I almost bettered the position up there in the 96, 97 area, but I didn't want to carry all that risk. So we'll stand tight here. Well, we are right at the area where on 311 and 313 the shorts covered. If we get underneath this area, it could be ugly. We could have a wave of short selling take us down to lows, take us down below 70 in the cash, take us down to the 60s. I don't know. We're going to stay with the position as long as we can until we see some reason to get out of it. I wish we would have had a better location. We almost bettered the position up there in the 90s, but we just couldn't do it. I mean, we're already underwater on two contracts. We just didn't have the emotional wherewithal to do that, but that would have been a good move. Now we'll see if we can break below the B period low in the 79 area.
We're worried about doing business with Bear Stearns. That was part of what was happening here. And the great irony of this whole credit crunch is everyone was looking to the head.
This trade we're out at 86.50. It's not doing what we anticipated, so we're going to take a couple points and be done with it. We'll look for a re-entry at a much better position. We'll produce the snippet here.